So at the same time we're experiencing this regulatory overreach at the state level by a number of state insurance departments, we are also seeing the federal government trying to take over, as I mentioned earlier, the state-based regulatory system. The Dodd-Frank Act created the new federal insurance office at the Department of Treasury. And as I'm sure I don't have to tell you, when you create a new agency, guess what? It's going to look to expand its regulatory reach. And the Federal Reserve Board is now also getting into the business of regulating insurers. They're involved in negotiations right now with their international counterparts, primarily in the European Union, in setting capital standards for banks that would be over and above, on top of, the solvency requirements that are set at the state level. So that's why we're very concerned about these regulatory trends. Other federal examples, the Department of Housing and Urban Development has recently discovered a new ability to regulate homeowners insurers by the application of what they call a disparate impact standard. We, PCI, have sued the Department of Housing and Urban Development to prevent the implementation of that act. So the more and more the federal government intrudes or tries to layer on top of the state-based regulatory system, the more we are convinced that the state regulatory system will atrophy. And we think that that should be of significant concern to all of you as state legislators. So what can you do about it? Let me suggest a couple of things. First of all, I encourage you to take very seriously the oversight responsibilities of your state legislature on your state insurance department and state insurance regulator. Ask penetrating questions. And if you don't serve on that committee of jurisdiction, you have relationships, I'm sure, with committee chairs and ranking members. Ask penetrating questions about their engagement with the NAIC, the National Association of Insurance Commissioners, NCOIL, the National Conference of Insurance Legislators. What are they doing to push back against the federal overreach and intrusion into state-based insurance regulation? Engage with your congressional delegations. We have worked to great effect over the last couple of years. We now have bipartisan, bicameral coalitions in D.C. made up, interestingly enough, of former state legislators, by and large, who are asking some real penetrating questions of the Department of Treasury and the Federal Reserve Board about why they are engaged in developing insurance regulatory standards that are reserved by virtue of the McCarran-Ferguson Act for state regulation. So we love doing business in your states. We want to be there for your constituents whenever the regular, everyday occurrences of life happen in auto accidents. But we also want to make sure that there is a vibrant, vital, competitive insurance market in your state for when the big storms come, and to have the kind of presence that can be there for your constituents. Because if we're not there and we're not doing our job in responding to those policyholders, I guarantee you, you're going to get calls from your constituents about where we are, and we don't want that to happen.